it's a what you call interesting design of avoiding fiscal exposure immediately, while at the same time using the fiscal support, the availability of fiscal support at later time to make private investments happen. I don't very clearly agree with Mr. Sabharwal on costing. My view is that ultimately the cost should include. We didn't include, maybe is what Mr. Rajni said. The cost did not include the construction risk adequately. Did not cover for them. So ultimately, if there is somebody who's going to bear the risk and cost arising of that risk materializing, the overall cost should come down. I think that is the way we must, structure. But how will it operate? The details have to be worked out. It's an interesting concept, but if we don't get the implementation part of it very right, I think it will go heaven. I agree with Mr. Rajneesh on that.
Yeah, thank you, sir. I mean, great inputs from all the panelists, especially a lot of interest I can see in the sense that we are at a very amorphous stage with this fund. I mean, actually, what the fund should do. The recommendation that we should have a working group to work out, thrash out the details is a really good one, I think. I mean, so we can suggest this as one of the recommendation. And as Vishwanathan ji said at the last point, that it is not completely about taking out the responsibility of the government in funding the larger projects. It's about government creating that multiplier effect to ensure that financing happens at much larger scale with such kind of interventions. So we'll now quickly move to the third aspect of the or third budget announcement which we are discussing, and probably I think one of the most talked about budget announcement in terms of financial sector. Probably a committee after to look into the financial sector, banking and financial services after three and a half or almost 4 decades. We had the Narsimham 1 and 2 committees. After that, such a comprehensive review of banking sector has not been planned. So in this context, I would request again Vishwanathan ji to come first. I mean, what do you see the importance of this committee in the current scenario, especially looking at, we have discussed a lot about financing needs, but then there are other smaller needs which comes from various other smaller entities, financial inclusion, the growth aspirations, the sunrise sectors which come in, the way the financial sector itself is going to change, the way they lend, the digital, the AI coming in. So we are in such a kind of a flux situation in which this committee is being asked to be formed and looked into the issues up to 2047. So request your thoughts on this, sir.
Yeah, it's a very big topic, but I think the way I want to place it is like this. Since we are giving the context of the nursing committees, I think a lot of water has flown to the Indian financial system, the Indian banking system, and the Indian economy in those 30 years. Okay, we are a lot more modern economy than we were at the time. Perhaps one of the highly digitized, payment system globally that we have. We have a robust banking system. The problems of what do you call NPAs are largely gone. We can still get back to that cycle if we don't learn the lessons of the past. But I think the larger issue that I see is our current banking structure the right structure to propel the country forward and be ready to finance an economy that will be the Viksit Bharat in 2047 and will take India to that direction. I think that's the first question that we are other committees should ask. And I think the answer to that in the normal course will be no, we are not. We are not there. And then we look at what are we supposed to do to get there. Okay, and that will include structures. Okay, that will include sizes. That will include competition. That will include entrance. Okay, so for example, I think the RBI has what do you call made this universal bank licensing on top, but I don't think maybe I don't even remember there were any applications. Rajesh will know better than me, but I don't think any of them made it. So we must look at, do we need more banks, or do we need more stronger banks? Okay, because like in the US, there are, I think it's like, if you look at what you call the XH index, which shows the index of competition, we have a very high index. I mean, low concentration that way. In the US, it's just 2 3 banks which will take care of almost a big share of the banking system. And most of the other requirements are met by the local banks. So you have state, federal banks. I mean, each state level banks, and they have federal banks. Okay. So whether we need that type of structure, we also need to look at what our public sector banks should be doing. Because I think in the past, the public sector banks, I think they are not doing anymore as much. But the public sector banks were kind of dispensing the, or providing the fiscal responsibility to the government. That's what they were doing. Right or wrong, I'm not getting it. So those are things to be assessed. Okay, and further, uh, we need more capital. If the country has to grow to the level extent that we want to be the Viksit Bharat by 2047, it will be the financial sector that will propel it. Okay, and the big part of the finance sector will still be banking. And except for US, I don't think anywhere else the capital market is the biggest financial services provider. It will still be banking, whether it's Europe or even UK. So I think we will have to look at, I think, banking system from that perspective. Number one, which will also include, in my opinion, maybe getting provocative. Are we getting right on the priority sector? Are we getting right on the, what do you call, directed lending, as one would call in larger picture? Is there, are our regulations more principle based, or are they rule based? Are they saying you do like this, do like that? But incidentally, though, I was just before coming to this, I was looking at the global practices. Some of them are almost like what we do, even advanced countries like UK. At least here we don't approve appointments of CRO. They approve CRO appointments. We are only looking at CEO appointments here. In UK, CRO appointments are approved by the central bank. Okay, so maybe some of them we are not as archaic as we think we are. So I think the way the three big themes for that committee will be: is this current structure capable of, propelling country to the 2047 and cater to that type of an economy? Number two, if not, and in my opinion it will not be, then what should that be? Within that, what should be the role of public sector banks and private sector banks? And five, we had this. It was the what do you call Khan committee report, the former IDBI chairman, who brought this whole concept of universal bank. Which of course led to the complete extinction, so to say, of the development international institutions. So whether banks should be, getting into what do you call investment banking? Should they be funding large projects? Otherwise, what are the opportunities? Are there other things that they can do within the framework than they are being authorized to do today? Other relaxations that are possible, tightening somewhere. So I think three things. And then, do we want very large bank? Do we want a large bank? There's this whole concept of having a global sized bank. But again, I was interested in looking at the ICBC balance sheet for some other context. If you look at, I just don't know how they work. It's still a maze to me. They work on an LCR of 120, 25%, 130% all the time. If they're so highly liquid, where are they making the profits from? I don't know. They still make profits. So we must look at what is it that the globally large banks are doing. That's what I think this committee should look at. What is the driving force behind the globally successful large banks? Are there things that we are not letting our banks to do, and what way we can get them there? So, for example, the current decision to have banks do acquisition finance, it's a big step. I mean, with a lot of what do you call caveats, though. It's a big change, at least in terms of approach. But I think we need a lot more of those, and it should come from a very detailed analysis. One small point I want to make, that some of the prudential standards are now global. Extremely difficult for a country like India to make its own beyond a point. We tried in a few cases, and the Basel Committee came down heavily on us. So we have to be very careful on that. So it's not those standards that we will be looking at. It's the operational part. I think the committee should, whichever committee is there, and most importantly, the structure. and the role of public sector banks.
Thank you, sir. I'll take to Rajeshwar Rao ji from where you stopped. You mentioned about Basel committee and the operation. You maintain the guidelines around that. So, do we actually? It's a probably a little controversial also. RBI is seen as a little more stringent than Basel when we look at it from the terms of ratios which has been stipulated, whether it is CET ratio, liquidity ratios for DSIBs, etc. So, sir, in your opinion, whether the time has come for a committee to look into relaxing some of the tighter controls which probably would have been created in the period of earlier volatility?
No, I think while I agree largely with what Vishwanathan has said, I think when it comes to these norms, I think the norms should be left to the discretion of the regulator, because if they will look at the risk profile of the institutions which they are regulating and then work out what is appropriate for India. I think in the Indian context, perhaps given the kind of recovery mechanisms, the etc., which we have in the country, a higher capital threshold was considered necessary at that point in time. But going forward, depending on the mechanisms and the infrastructure or the frameworks which we have, the regulator could take a call. So I would leave it more to the regulator discretion rather than making it a prescription through a high power committee. Having said that, I think we should also look beyond what Vishwanathan said, that while capital raising for the new entities is going to be a challenge, what mechanisms are available, what kind of structures would be necessary, especially for the public sector banks. We should look at consolidation of the public sector banks. So I personally am not very sure whether having a large bank is per se a criteria for enabling us to achieve a what do you call competitive financial sector or facilitating an advanced economy status. But we have a very well diversified set of banks. I think that can continue, but they need to necessarily grow, and to grow they need capital both for credit growth as well as for investments into the operational sector. So how do we finance that is something which the committee could look at. Concomitantly, there would be need to expand the remit of risk management, the risk suite of risk products which the entities would require, the financial market infrastructure which has to be there in place for these large entities to operate in an advanced economy status. So what could be the roadmap for improving the financial market infrastructure, the digital financial infrastructure, etc., could also be something which can be considered. Another interesting point was the resolution process. I think recently there was a speech by one of the deputy governors of Bank of England, where I think there is a efficiency of capital or a lower requirement of capital if the resolution processes are much better laid down. So the committee could also look at this resolution process, because that can then free up some capital resources for the financial entities. Along with this, I would also suggest the committee should take a look at what are the current statutory frameworks, because we have over a period added on the statutory obligations, the roles of the regulators into the various acts. I think there is a need for a bit of cleanup on that, because typically you look at RBI Act, the entire edifice for the NBFC regulations is put in Chapter 3 of the RBI Act. Maybe we should think of coming out from that. NHB, again, some parts of the housing finance regulation is coming in the NHB Act. Then we also need to look at rationalizing the RRBs, which is another area of. And also, when we look at capital for growing the private sector banks, aligning the voting rights, the levels of investments, those are some of the kinks in the regulations. Not exactly kinks, they were appropriate at that point in time, but we should have a rationalized or a relook at some of these issues. So I think these also could be some of the areas with the high power committee could look at going forward.
Thank you, sir. So you brought in very interesting aspects like resolution process, statutory regulation, bringing remit of risk management into the committee's terms of reference, probably very valuable. But one point I would pick, and I would go to Rajneesh ji on that. Rajeshwar Rao ji said about the need for whether bank consolidation is required, whether we need large banks or more banks. So, as a practicing banker, how would you see whether practically this may not be a dichotomy? We may need large banks to write and take a larger risk or underwrite larger checks. But at the same time, from an inclusion perspective, we may require more banks or more branches or more outlets. So, Rajnishji, in your view, how do we address these multiple challenges, or what could be the committee be looking into in these aspects?
Mute.
So you're on mute if you can. रजनीश जी आप म्यूट में हैं.
So, like, my wish list is a bit longer than what has been said, and again, it will require deliberations at your end. But what I feel that whatever we do now with this high-powered committee, one is that it has to assess the needs of the country and their pride. So today, your composition of GDP is 55% services, 30% manufacturing, and 15% agriculture. So we will have to look that every 5 years what is going to happen and will be composition of our GDP. And then once we have done that, then how much capital support is needed from the banking system and whether domestic capital is sufficient or how do we bring in international capital and what role domestic banks play in facilitating that. So that would be one mandate for sure. Some of the key trends which are very visible, they are, one is, we have already discussed a lot about infrastructure financing. Another is your climate financing area. Then your AI and digitization is reshaping the banking sector globally. Then your payment system and digital currencies, that is another. So the mandate of the committee would be, as I said, how to attract international capital for meeting or supplementing the domestic capital, which is obviously not sufficient or adequate to have a higher rate of growth. Then both the deputy governors have mentioned about the need for how does our banking system look like. Right now, it looks that we have a major, still dominant public sector, about, I think it would be still 55 to 60%. We have private, we have a small finance bank, we have cooperative banks, we have regional rural banks. So there is a time definitely for this committee to look that, is it helping or is it not helping? To me, small finance bank, regional rural bank, a lot of overlap. And the idea about RRB that they will be low cost, it all disappeared with the pay parity. This is high time to look at. The second is about, after 2008, globally, what I have observed, and I sit on the board of HSBC also, nobody believes big is beautiful or we need to be international. You look Citibank, what have they done? You look HSBC, what they have done. So they have exited left, right, and center from many markets. So there is a huge difference. When they decide to exit, they exit. But for Indian banks, that is not the route. If you're there, you can't exit. So you can't really manage your capital efficiency or return on capital in a very professional manner. So we have to very carefully examine that government, should they go for merger route, which has its own challenges and complications, although we have done successfully in the past, or whether it divests. So the second one is, we know political what to do, but still when committee is there, they can examine, and after that they can give pros and cons of both the options. And then ultimately it becomes for the political leadership to take a call. Then Mr. Viswanathan mentioned about directed lending and financial inclusion. So we have made a lot of progress, and here the role of the government banks, that comes to the problem. But now, having achieved a certain level, so how do we encourage the private sector to be an equal participant? In general account, why is that 25-30 crore account have to be State Bank of India? So why? Because I am taking indirect cost or I am able to absorb, and government's argument is also valid. I am providing the capital. I am telling you to do this, but this will not work with private sector. So how do we incentivize them to do this work? So we have to think about that if really we want more participants for financial inclusion, should we leave it entirely to the public sector banks, or why and what will make the private sector banks to take it in a proper way? Then one issue, I don't know, but internationalization of rupee is a big subject, and capital account conversion. Should this committee not be looking at least this aspect? Even Nasiban committee looked at it, and capital account convertibility recommendations, the country was not ready to implement. But now in 2026, and with vision of having rupee as an international currency, another spanner which is coming in digital currency. So this issue of convertibility, internationalization, and digital currency, maybe all in one. It needs a serious thought and look by this committee. We have already discussed infrastructure, climate finance. Then what happens to new age sectors like fintechs, agri, SME? We are having clean tech, hydrogen, solar. So how do we prioritize if the capital constraint is there, and banks obviously cannot do everything? So how do we prioritize? That would be one. And the digital, AI, and cybersecurity risk. So, and data protection, that would be another chapter. Rest is all about a very clear framework from RBI on licensing requirement. So today, one day you give to Emirates, NBD, that you come in an RBL and have 50%. On the other, your voting right is 15%. So there's no clarity. Either the policy is case to case, or there is a policy framework. So that also probably ownership requires. So if I were to summarize, how would our economy would look like in terms of sectors in next 5, 10, and 15 years? We will have to divide. We can't say in 26 we are here and 47 we will be there, and there is nothing in between. So we will have to, because it will develop. New trends will come up. Second is the shape of the banking, how much now public doing, private, RRB, what is their market share, and what value add they are doing to the economy. Third is flow of international capital, and what role our banks play. And the other, of course, is large versus medium versus niche, and divestment versus merger.
Yeah, I mean, a lot of, as we started the topic, a lot of areas, sorry, to be covered. Sorry, at the end, you also mentioned about the clear policy on licensing. I would bring Mr. Sabharwal on this topic, because while we talk about banking as a part of, I mean, the committee's purview, I think NBFCs have also become equally or as important member of the financing ecosystem. So from an NBFC perspective, what are some of the factors which you think should be part of the committee's consideration?
I think this is a very wide topic, which will have a lot of points. To the earlier point, I feel India definitely needs more banks as well as large banks. If initially, if you remember, you spoke about the economy growing about 8 times over the next 22 years. If the economy is going to grow 8 times, I'm sure the credit will need to grow 12 to 14 times. And if it has to grow at that pace, and you do a reverse calculation, that as banks become large, the growth rate only becomes small, which is correct also. You've seen the largest private sector bank growing from 25 at growth rates of 25 earlier to 20, and now to more closer to 15 or to 12%. So growth rates will come down. So if you have to meet the needs of the economy and plan for that, I think we will need new bank creation, large bank creation every 3 to 5 years. Then only we can reach that stage. Otherwise, we will not reach that stage. Now, whether they will come as new entities which looks unlikely or some non-banks becoming banks, that I think time will tell and the regulations will tell how it will shape up. And I think the regulator is the best person to decide how it should shape up. But what we definitely know is that we will need more banks and we will need large banks also. That is necessary if we have to meet the needs of the country. I think from just while the committee looks at it, what will be very important, whether from a bank or a non-bank perspective to look at is how do we ensure there is enough liabilities available in the system? I'm less worried about capital because if the institutions perform well, there will be enough capital available to support them. Whether it is domestic or international capital, there'll be enough capital as long as the entities continue to do well. Yes, it is going to be an issue for public sector banks, whether how much ownership can come into public, but capital will be available. I think more is about how do we ensure that enough liabilities are available and enough liquidity stays in the system. I think that is going to be a bigger focus as we move forward into the system. And the third thing, which also stems from what Mr. Vishwanathan said, is whether you call it risk or you call it whatever, finally it is governance. How do we make governance as a much stronger structural, while the regulator has taken a lot of steps, whether it is in terms of CRO role, compliance role, independence of those roles. But I think as we look to the future, a lot more probably can be thought through on making governance better, such that in case there are any problems which happen to any banks or non-banks, they are detected far, far earlier rather than they reach a stage when we need to do a merger or do something about it. So the other thing which we will all need to remember, at least I personally feel, that we are seeing probably the biggest shift technology can have or impact technology can have in the whole system. And it, with Gen AI coming in, it will be transformative. If that's a low ball word, I would say, it will be far, far more disruptive than any of us are thinking today. And we need to be prepared for it and to handle it in all ways. And we have to find a way that we handle it the right way rather than the wrong way. So I think these are all things which we need to look together. Obviously, I don't know whether this committee will also look at non-banks or not, but I wish they do. And they lay down the path for how non-banks will grow and also what will be the future when they will become large. And we need to think about it now rather than later, because we've seen the challenges of later, because HDFC did it later with HDFC Bank, which impacted the growth of the largest bank for a few years. So the impact is much larger if you do it later than earlier. So I think policy should look at it. These are just my thoughts. I just thought I'll place them.
Thank you. Thank
Can I
you.
make one or two points more quickly, very quickly, because
Please come in. Please come in.
Yeah. So one is this securitization market and development of marketplace for the loans. Some work was done by IBA, and RBI also gave its guidance and all that, but that is really not taken off. So that is another one thing. And talent management, corporate governance and talent management gels in that. How do we do the talent management, particularly in the public sector banks? So that would be probably another area for the committee to look at. But that means that the wish list is very long. So you may have to prune it, you may have to expand it. I don't know.
Since Rajnish said, I just want one line to add, Manoj, which is that, Mr. Rajesh talked of the resolution issue and did not deliberately bring it. But I think we have the FRDI bill. We must look at why it did not take off, whether it's becoming a resolution for the entire finance system is causing a problem. Okay. Having it with another institution rather than the regulator himself is another problem. I think we need to look at that. We have a bill. some thoughts have gone into it, how to make it. We need a much better resolution process than we have today. But I think there are serious issues with FRDA bill. I was saying that when it was RBI, but then I was stakeholder today. I can tell even with independence that bill has a lot more of problems than it's trying to solve.
Actually, one more point. Yes, what Mr. Sabharwal mentioned about NBFC, I think I would say that also should be part of the wish list for the committee. In fact, I would put it as that, because consolidation in the NBFC sector is critical. You have 8,800, 8,900 small NBFCs. It's a very large number, but very small entity. So some kind of a consolidation path for them. What is the way forward for these entities? What will be the role of private credit in the times to come? Maybe even look at urban cooperative banks. So I think the committee could look holistically at the financial services sector rather than just only the banking sector.
Banking sector, correct. Yeah. So lot of discussion points, lot of areas, because this I think is one of the major impactful announcement of this budget, which can have a long-term strategic outcome for the country. Moving forward, I think the last topic of discussion for today is on vision of NBFCs for Viksit Bharat. There has been an outline for that. Clear targets were given on disbursement, technology adoption, etc. We also felt that in another 5 to 7 years, 50% of the credit to private institutions probably would come from NBFCs. So one is to improve the efficiency and scale. So in private sector, the announcement is that there should be a restructure the Power Finance Corporation and REC, which are the twins which are there. So I think some steps have been already being taken by the respective institutions in this regard. I would request Parvinder ma'am to come in at this stage. What are the steps which we are looking forward? What could be the synergies which we will emanate from this restructuring or amalgamation? Whether the combined entity can have much more strength, more products, etc. Your initial thoughts on this, ma'am?
I think if we see the financing for the infrastructure sector over a period of time, share of NBFCs have grown drastically. So if I can share with you the RBI report for 31st of March 2025, its infrastructure financing by NBFC is around 58%. And again, if we see that out of which around 4% is through private and private sector NBFCs, and the major is from the government-owned NBFCs. So this announcement is a welcome steps in the sense that when we talk of the infrastructure finance NBFCs, looking at the overall requirement of the funding for the infrastructure sector, which in one of the document as has been shared is around 900 crores by 2047, 900 lakh crore by 2047, of which the major portion is coming from the power sector. I talk about the power sector, we are looking at around 50 lakh crore by 2030-32, and again around more than 200 crore by 2047. PFC and REC has been both in the power sector financial and the sector specific NBFC. In order to have economies of scale and the benefits from the capital point of view, I think the decision is a very welcome step for the restructuring of both PFC and REC. And as you said, that institutions have taken certain steps, both the organizations and their board have decided that both the companies may emerge as a largest NBFC of the country. We were already having, this was basically I would say, a easier step for PFC REC to be undertaken because we are in the same sector. We are under the same administrative ministry and we were in the holding and the subsidiary structure. So on the overall basis, to have a larger capital base for giving an early financial closure and especially to expertise, I think a lot of in the earlier discussions, lot of issues have been raised on the appraisal part. And being the sector specific companies, we have a focused approach on the power sector and working together for taking the government vision ahead. So I think that is the basic premise. And when you talk of the synergies, we will have, even if now we have a lot of commonalities, as I already described. So we will have a common appraisal framework. We will be looking at the overall requirement and especially the new sectors. When we talk of the green hydrogen, CCUS, small modular reactors, storage. So 1800 gigawatt of the non-fossil fuel capacity we are looking. So that is going to our combined tier 1 capital, which will be more than 1.5 lakh crore, will give us the, I think, enabler for funding of that requirement.
Thank you, ma'am, for those initial thoughts. And the merger is, both the boards have approved the way forward. At the same time, I would request Rajneesh ji to come in. I mean, as experienced person in this particular area, handling a complex merger, what would be the 2-3 key risks or challenges that the management of these organizations should ensure that they don't fall prey to?
So I think on the top should see people integration. That is always the biggest challenge in any merger. But as Madam mentioned that they were under the same mandate and already subsidiaries there. But still, like when the merger actually happens, situation may be different in case of PFC REC, but it becomes a host-guest relationship. We merged 6 banks in one go. So there were a lot of apprehensions amongst the subsidiaries, the people. मेरे ट्रांसफर का क्या होगा, मेरे पोस्टिंग का क्या होगा, मुझे क्या असाइनमेंट मिलेगा, मेरा फिटमेंट का क्या होगा, वेयर विल आई से, अभी करंटली आई एम जनरल मैनेजर स्टेट बैंक में मर्ज होऊंगा, मैं डीजीएम बन जाऊंगा. So people issue that can derail the merger, and IDBI and IDBI Bank is the best example of that, how merger on Air India and Indian Airlines, how these mergers were not successful because of the cultural and people issues. So that should receive the priority. And here the host means PFC will have to have larger herd to show towards REC people probably who will be more apprehensive because they are losing their identity. So that is one. Second is, of course, process gap, process analysis in both the organization in terms of that how do they come at par and standardize. Every process they will have to look at. Then third is, of course, technology. I don't know whether they run on different platforms or is it the same platform. So tech and data merger. So that will take some time and very careful planning so that there are no gaps left there. So sometimes there's a huge gap. Even again, coming back from my example, that we were on the same system, but the SBI system was much more advanced than what we could achieve in our subsidiary. So it was not, it was same, but not exactly the same. And item to item, it took almost 6 to 8 months of planning to identify that where are the version gaps of all the software which was being used, and then how do we bring it par. Then the balance sheet merger I always consider to be an easier part, not a complicated one. Board merger also probably will go through, but I would put it people on the top, and then tech and data merger, and the process standardization. things maybe would be much easier for PFC REC. Then you can understand for a state bank where we closed down 2,000 branches in 3 months without creating any political storm. So it required a much more detailed and granular level of planning. In this case, it may not be there, but these are some of the things which I thought that I should share.
Thank you, sir. I mean, I think you have brought it very basic requirements, which sometimes gets missed out in the consolidation processes that needs to be taken care. Also, I mean, this entity, as ma'am said, would be one of the largest. I mean, it will be the largest NBFC in the country. So while it creates a lot of capacities, it also brings in its element of risks. So from that perspective, I would request Rajeshwarji to put in his thoughts. What could be some of the risk management measures also that this entity, the new entity, should look into because of the size, scale, especially on a concentrated infrastructure space that they will be playing out?
No, I think that's a fair call. The concern is largely on the risks. And here, I think the biggest risk will be the concentration risk. All your eggs are virtually in one basket, so to say. So what kind of diversification the NBFC would need in the times to come so that it doesn't become too concentrated? Because if anything happens in the power sector, then the entire risks spill back into the PFC, and then it will thereafter spill back into the banking system, because the large proportion of the funding does take place either through bonds, investments, or through bank credit to many of these entities. So I think concentration risk and diversification could be some of the key challenges which the merged entity will have to tackle in the times to come. And maybe the regulator also will have to work closely with the entity concerned.
Thank you, sir. Thank you. So I think with these 4 topics discussed, we have fairly covered the areas assigned to us. I mean, there are participants in this webinar. I would request 1 or 2 of them to quickly give their thoughts, a 1 or 2 minute intervention. I would request Executive Director, Bank of India, Sri Rajiv Mishra, to come in.
If you allow me, I would like to respond to the risks.
Please, ma'am. Yeah. After your, please go ahead.
Yeah, I think it has been rightly put from the perspective of what are going to be the challenges for the merged entity. If we talk, manpower is always said to be the larger risk, but we have both of organizations have a very lean manpower, and we are concentrated at one place. Our operations are majorly from one place. We don't have the challenge which generally the banks have with lots of branches and lot of, I think, geographical spread. On the other side, there are, especially on the manpower side, our policies are aligned, and the scales which are there, which has also been aligned. So on that front, we will also not be facing much of the challenge. I agree that there could be with regard to the technology and the technological platforms. Right now, both are on the same platform, and gradually we will be upgrading definitely with the merged entity. So those challenges have also been analyzed. But yes, when we do actually, then only we will be knowing that what are the challenges that is going to be there. Yes, cultures may be different. When you work in a particular organization, then you are adopted to a particular culture, and when the merged entity is there, then both the companies need to align their culture, and gradually it may take some time. On the risk front, I think it has been thought well in advance, and in 2023, both the organizations were allowed to diversify from the power sector, even though to a limited extent. So we have been already given the mandate to diversify to the other infrastructure sector as per the harmonized list, but with a special focus on the power sector, looking at the overall requirement of the power sector. And definitely we will be looking ahead that how this merger and the merged entity comes up. And definitely we would be having the guidance from the regulator in this regard. Thank you.
Thank you, ma'am. Rajiv ji, you can come in now, please.
Thank you, sir. Good afternoon to all. And it was a pleasure to be hearing all the esteemed panelists here and lot of learning experience, sir. In fact, it was very well pointed out here that the days to come, when we look at it, the need of Viksit Bharat to go from 4 trillion GDP to the 30 trillion GDP, we need to have a lot of changes. And the bank landing, the landscape changing from the lending landscape to the liability, availability of liabilities, to the role of the banker to be a banker to every citizen of the country, or we can say financial inclusion 2.0, to the change in the technological landscape requirement where the AI, genetic AI is coming, the requirement of the talent manpower, which is required both on the skill sets, which are required both from the IT front and the other on operational front, including the risk. We need to change the entire gamut of it. We are looking at funding the sunrise sectors, which would be the sectors or infrastructure sector, which was discussed in the first point of discussion, which would be the actual growth propelling to us to see that we reach that higher trajectory. But then that will also require a higher capital requirement for the bank. So looking at on that thing, the term of reference and which was writing out, if we want to do all those changes, there has to be good corporate governance which needs to be followed on. So my take is that we need to form of all these things and look at it, how we want to do it. And finally, when we look at the merger part of it, Rajni sir very rightly pointed out, with the size of the banks which we are, we need to look at all those 4 or 5 areas, people, process, technology, to be put in place. So it's a well thought of discussion here, sir. Thank you for making it part of it. I think we are going in the right direction here.
Thanks, Rajiv ji. I would now request Ashok Chandra ji, MD and CEO, Punjab National Bank, to come in.
Good afternoon to all of you. I think it was a really very great pleasure in understanding, listening to all of you. I think all the esteemed panel members. A lot of takeaways are there from this entire discussion. I will be restricting to some of the discussions which has already happened on that important thing which I would like to flag it here. I think the government is spending 10 to 11 lakh public capital expenditure every year for the last few years. And this year also, 12.2 lakh crore of public expenditure has been planned. Rajnish sir rightly mentioned that the private capex, which is expected to come, and in fact, that should drive the expenditure and that should drive the economy. I think that is little bit is missing in the entire economy. And he will very well suggested that whether the clouding of investment in some sectors that should happen. And I can share my experience, what is happening in the entire banking system for the last 1 or 2 years. I think there are some sectors, they are behaving very well, where we don't see any risk also. And there are interest from the private sector enterprises. Those sectors are like renewable energy, battery storage devices, defense sector. I think we are seeing a lot of interest and people are coming forward. Roads and power sector, that is behaving very well and a lot of interests are there. Renewable energy, I think that plays very important role from the point of view of the projected 500 gigawatt which India has signed by 2030 going to happen. And current capacity is only 285 gigawatt. So a lot of opportunities are there. And since this particular sector is also behaving well, I think we see a lot of opportunities going forward. And definitely the private capex should fill those gaps which is there in this particular activity. So these are the 6 sectors where I feel that clouding of private investments, definitely it should happen. And if we are all aiming for the 2047 Viksit Bharat, I think these 6 sectors going to play very important role. Now, coming to how the funding has to happen, I think some discussions have happened about the bond market and especially the corporate bond market. There, my take will be that we need to deepen this corporate bond market. And for Viksit Bharat, we require USD $30 trillion. And the per capital income also, it is required 18,000 USD. So that requires a very large scale long-term capital. Currently, when I was just seeing the figure, the market cap of equity in India, that is $4.8 trillion. But the bond market, if you see that what is the market cap of that is, it is hardly 0.64 trillion USD is there. So I think there the big opportunities are there, and definitely I will suggest that whether the corporate bond market, municipal bond market, I think Kiran Raj sir also mentioned, and the deputy governors also mentioned, Rajeshwar Rao sir and Vishwanathan sir. I think municipal bond market, green markets, and green bonds, I think those things I feel that should be encouraged. And the sustainable infrastructure growth, I think definitely bond market has to be penetrated, and it has to play very, very important role. I was just seeing that the one thought is that investment grade instruments, that also should be allowed in the bond market with fiscal responsibility and budget management, that FRBM framework. I think all states should be allowed to participate in the municipal corporations. They should participate in the bond market, and all state entities to raise funds through this bond market only. I think this is one some sort of directions, or some if it is required to be made through the act, I think that also should be done. Secondary market to be made very vibrant, and our present turnover, which is just 0.3, whereas in China or other developed countries, China it is 1.6, and Indonesia I was seeing it was 1.17. So I think that market also has to be very, very vibrant if we want to see that the entire ecosystem has to go to a different level. Maybe the tax incentives can be allowed to from the income to be generated from these bonds and capital gains. Now, again, important aspect that is the pension fund. Their present AUM is around 16 lakh crore, and insurance fund having AUM of more than 75 lakh crore. I think that has to be encouraged, and it has to come in the bond market participation. And they need to play very, very important role. Along with this, whether we can come out with the MSME bond also to be introduced and to be kept at par with the corporate bond market in order to further support the MSME. I think these are some of my thoughts about the bond market penetration and the role which the bond market is going to play in the Indian economy. I think we have already seen that for in this budget, a lot of thrust has been given on the MSME financing, and all the CPSEs are now mandated to use the trade receivable, that is a trade platform. What I feel that a lot of awareness is required, because that trade market, trades are there for a long time, and RBI had pushed it, and it has brought some vibration in the economy. But the opportunity which is there in the entire ecosystem, I think we need to further escalate and further penetrate in the market with the budget enablement for the CPSEs. I think definitely this particular market will behave very well. REIT financing proposed by the budget is a welcome step, and all the banks, they will be taking up a good exposure in this particular field. Last point is the initiative of the government to set up high-level committee for banking reforms. I think definitely they are going to look into all those aspects related with not only the banking reforms for the entire financial sector ecosystem, and definitely outcome will strengthen and will provide the roadmap for the Viksit Bharat 2047. So thank you very much, and I'm very thankful to the DFS for giving me the opportunity to participate in this discussion now. Thank you.
Thank you, Chandraji. You kind of summarized the topics which we already discussed. I would also request Mr. Bhaskar Babu to come in to give the perspectives of SFBs in this whole journey towards Viksit Bharat 2047.
Thank you, sir. It was a great learning from the panelists. Sir, I'll stick to very short and purely on financial inclusion. Sir, there is a complete rethink probably is required on inclusion. It started as more of poor, rural, as an obligation for PSL. Probably things have changed. It is not just one segment. It is no more just about including who have been excluded earlier. It is also about in terms of catering to substantially aspirational segment. As we talk about more on technology, AI and all of that, the biggest risk probably in this segment, which is probably 20 crore households of the 50 crore households, is staying relevant. And for staying relevant, it is not just enough to just tick the box in terms of inclusion. It, as Prime Minister also mentioned, from intent to delivery experience, this can happen only when there is a complete harmonization between products and how it gets delivered to them. In a world where we're talking about technology, we still insist on passbook being printed in the branches, where UPI transactions will run into tens in a day. So there is a complete rethink which is required as part of this, and probably this high-powered committee meaningfully spending, starting with even the way in which inclusion is defined and how it can be delivered, will be a very, very useful approach. These are 3 bits from me. Thank you.
Thank you, Bhaskar Babuji. I mean, a very good point which you brought out. I mean, we have, how do we go beyond the numbers in terms of financial inclusion? And how can some new parameters and metrics, which actually say what financial inclusion involves, can be brought in, which suits, of course, numbers were suited at certain point of time. Going forward, now we have achieved the numbers, how those numbers can actually translate into real financial progress to the members of this society. So, I mean, so we are kind of reaching the end of the discussion points. So I would now request Professor Charan Singh ji, eminent economist, and our valued professor, to come in and provide his final comments, a summary of the discussions what we had today.
For this opportunity. I think we have had an excellent discussion for nearly 2 hours now on 4 different aspects. We started with the story on the CapEx, and I think many issues that came up are worthy of discussion. And in the summary, I would simply like to say that there is a scope of many more projects to be identified, as mentioned by one of the panelists. Probably have a bank of projects, identify districts, maybe aspirational, and see if those can be opened up to the private sector to come and play a role there. One important issue that came up, and I think that's very relevant, was brought in by the panelists from the SBI. The point that in the past, disproportionate risks had been passed to the private sector. They've burned their finger. Now the trust needs to be built in to bring them back. How to bring them back? The point again was made that there has to be return on capital. That's the prime objective of the private sector. The development financial institutions play an important role, and in the long term financing, they are the most important as a financing unit. The point that was made there, I think, is very important. States need to also be taken into confidence and carried along. The 2 illustrations that came on the climate and land issue, 2 factors that need to be taken into consideration while the formulation of the plan is being done at the initial stage itself. Municipal bonds have been coming in various discussions throughout the day today. And I think that's very important that also in the private sector can play a role. There are new areas which are emerging, green energy, data center, and that probably would attract the private sector to bring in capital. One point that was made, and I think is very important, that new sectors, new technologies need to be thought about. From the power sector, the point was very well made that the power sector has stabilized. Lots of capital is already flowing in, especially for the renewable sector. One aspect that emerged from this discussion, and I thought was a very relevant point, was we need a good study as to why the private sector is shy. Is it that after a certain threshold level, and that's my thought, the private sector would come in very quickly? Is it while most of the capital investment by the government is being done in point to point, and in between there are cities and towns which are feeling left out, the private sector doesn't see it as an avenue, and therefore after a certain threshold they will start investing? Is there some incentive that we are missing that can become part of this study? It was mentioned that asset light investment is probably playing a role, and also, and maybe, that trading has become more profitable than manufacturing. The second section of this discussion was on the guarantee fund. And I thought that was a very interesting area. Is it we need help in financing projects, or is it cost? And there was a thought on both the aspects. Maybe it is both. Well, one thing was very clear, that this is a complex issue. How do we reduce risks? Should there be a separate body? How should we go for risk appraisal? Should it be done by the lender itself? Should merchant bankers have a skin in the game? What would the cost of intermediation? We also thought about, should there be a regulatory relief provided? Again, a very good example was hydro projects suffering from climate risk. Can this fund help? Urban infrastructure. Urban bodies may need to have some support, and this fund may be of big help there. Another thought that came in was the fund may be there to sort of mitigate the risk or provide the initial support, but maybe we'll need liquidity fund also. Redressal mechanism has also to be addressed. Dispute resolutions have to be seen, because while you're doing an assessment for a long-term infrastructure project at the initial stages, you might not know the things that will turn up as times pass. And therefore, mid-term review, maybe monitoring will have to be done. One issue that came up here, and I thought that was very good, was there may be strategic sectors in the budget that may benefit immensely from these guarantee funds. Maybe one should explore that they can serve as a catalyst for emerging sectors to take off. In nutshell, the panel thought there is a need for an internal group to study various aspects of the guarantee fund and its implementation. The third issue, which is very dear to my mind, part of the Viksit Bharat, is how about the high-level banking committee? On this, various aspects were discussed in terms of the terms of reference for the high-level committee. Is there a need right now after the two Narsimham committees? I think yes, and that is the broad feeling I got from the panel. What should be the structure of the economy that would have to be funded from a 3.5 trillion to about a $35 trillion economy? What will be the agriculture industry services like? Would we need a brick and mortar branch, or should we go digital? What should be the structure of the banking sector? Should we only focus on the banks and focus on the public sector banks? Or would it be now time to even focus on the private sector banks? Should the non-banking finance companies, which have played a very important role, the shadow banks in the Western world, be relegated on the side ring? Or should it become an integral part of the main study by this future-looking, forward-looking high-level committee? Should we restrict ourselves only to the NBFCs from the banks, or should we also include other financial institutions like the urban cooperative banks that are now very well regulated by the Reserve Bank of India? I think the thought procedure that happened in this panel discussion was very rich. The panel also thought, in future, what will be the economy like? We will have to focus on digital, we'll have to focus on data. Therefore, we might have to bring in the issues of globalization, like internationalization of the rupee, which was put on the side ring in the earlier committees, but Tarapur committee spoke about it at length. We almost concluded, whatever said and done, we will have to take care of the governance issues. Finally, the issue came on the government's power sector NBFC. And I think there, the issues were quite clear. The path on consolidation has started. Diversification between the two is already done. The thought on the HR issues has already been playing a role. What should be the merger like? What are the issues that will have to be focused on? Technology could be one. Balance sheet, of course, is not a major issue, but data merger could be another. So I think all in all, the panelists have contributed significantly to the to the exercise which the Prime Minister was saying, that we need to brainstorm on issues that have been mentioned in the budget. Thank you very much.
Thank you, Charan Singh ji. I think we have reached the end of the breakout session which we had, and I'm sure we had a wonderful deliberations. Thanks to all the panelists and participants, especially for Professor Charan Singh to summarize the entire discussion in such a concise and wonderful manner. And I thank all panel members once again and all the participants for their active contribution. Thank you very much.
Thank you. Thank you.
Thank you. Thank you so much.